lower time frame order block refinement. So now that we've touched base on order blocks, we can get into how we can refine them down and essentially be more precise with our trades. So the first thing that we need to do with order blocks is we can refine them down when possible. So it's important for us to note where that momentum has come into the market, meaning where have the institutions previously got in? Because what happens is wherever that momentum started, price will usually come back to that area to mitigate, and then for price to continue its move, whether that be to the upside or to the downside. Now, the reason why refining order blocks down on a lower time frame is beneficial because it tightens our area of interest, meaning we can get in more precise with a tighter stop loss and usually decrease our drawdown on a trade. It will also give us the chance to increase our risk to reward on our trades so we can get a better return on investment. Now the examples below show an order block refinement, so let's have a look. So let's start on the left here. This is showing a 1 hour bullish order block. So we had this bit of structure. This is the last down candle before the up move that broke structure, as we've learned already. So this would be our order block. We take the high and the low. Now for this example, we're going to say that this is a circumference of 10 pips. Okay, so to the high and to the low, we're looking at 10 pips. Okay, now if we look at a 15-minute time frame perspective, as you can see here, this is what we could be seeing when we drop down from an hourly time frame to a 15-minute time frame. Take a look at how we are able to refine our order block zone and decrease our area to work with. Okay, so this may be what we could see on the hourly. I know it's only 3 candles, but when we drop down to a 15-minute time frame, we can look at, right, where's that momentum come into the market? Well, in this example, it's this candle here, which also broke structure. Now, this is the last down move, and this down move on the 15-minute time frame could be 5 pips. Okay, so 10 pips for an hourly order block, refined down on the 15-minute to 5 pips. Now what this means for our entry and stop loss is we can obviously get in with half the size of a stop loss, meaning more precision, more risk to reward, and potentially less drawdown on a trade. So this is what it means by lower time frame refinement. Now let's get into some examples on the chart so I can show you the power of this. We'll start off with some bullish order block refinement, and then we get into some bearish order block refinement. Okay, so the first example we're going to be looking at is a bullish order block refinement. Now the left chart here is an hourly time frame on the Aussie US dollar, and this chart on the right is the 15-minute time frame. So let's start on the left here. So let's just zoom in. What do we have? Well, let's just look at price action. We had a high, we pulled back, and then we did break structure. So we put in a new higher high. So we have a clear order block right here. So we take the last down move. This is the last down candle before the breaking structure. So this is our 1 hour order block. Now if we was to look at entering based purely off this, we would enter at the top with our stop loss at the bottom. So let me get my measurement tool. We can see the high of this candle to the low. We're looking at around 11 pips. Okay, so 11 pips stop loss based purely on the hourly order block. Now if we look to the right and see if we can refine it down. This is the 15-minute time frame, and if I just go to the hourly quickly, you can see that our hourly order block is this candle, just like here. Now let's go to the 15. Can we refine it down? So where has the momentum come in? Well, it's clearly come in on this candle here, okay? You can see how large and momentous this candle is. Now what we can do is refine our hourly order block down to, well, firstly, where's the last down candle? Well, it's this one here, but if we take the next candle, we haven't engulfed the order block. Okay, so let's refine it down to this candle here. And what that's essentially doing is taking our stop loss, for which was over here at 11 pips, refining it down to 6 pips. As you can see, to the high and low, we're looking at 6 pips. Okay, so if we look at where price is, you can see we tapped in perfectly. Here we would be running at 11.15, and over to the left we'd be running at around 5.6%. So you can see, you know, we've pretty much, well, we've doubled our return just by understanding, you know, refinement and how we can be more precise. So can we take this even a step further? Yep, well, if we look at the next candle, you can see we have this little doji candle here. It isn't showing any momentum and it still hasn't engulfed the order block. So we can take it a step further and look at this as our order block here, okay? As you can see, price impulsed up and we come back and we tapped in. So we can refine our zone even more. So technically speaking, we can have a 3.5 pip stop loss. Now, do I recommend it? Not really, because we have this low here, so we can still account for the low. But the concept remains, we tapped in where the momentum began, tapped in perfectly, and then we saw the move to the upside. So if we can refine it down to this candle, we're looking at 3.5 pips, and our trade would be running just short of 19% in one candle. So that's the power of, you know, refinement and looking to see where that momentum's come into the market. Now let's get into another example and let's look at EU. Taking another look at EU, again, we have the hourly time frame on the left and the 15-minute time frame on the right. So starting on the hourly, we had an impulsive move up above structure. As you can see, we broke structure. So that gives us a order block to work with. Let's just zoom in. So firstly, let me just put on the order block, which would be this last down move before the up move. But the next candle did not show any momentum and it didn't engulf the order block. So we can refine it down. Now in this case, we do have a large wick, so the area to work with is larger. So it comes down to your own preference on what candle you want to take. You know, you'll figure it out in your testing as time goes on, but we're going to take this one because this is the last move in this consolidation before the expansion out. So you can see we broke and we pulled back, we tapped in, and then we continued to the upside. Now, if we measure from the high and the low, we're looking at 17.6 pips. And, you know, we tapped in, we got triggered into the trade, and we're running around 2.8%. Now, 15-minute time frame, what do we have? Well, we have the last down move with this large wick before price expanded out of this consolidation range. We then tapped back in, but as we know, we can refine this down even more. So firstly, if we just say we entered with a limit order as price come back in, stop loss would be 14 pips, whereas here it's 17 pips. But we can still refine it down even more. So we can take this candle and look at the next one, because we haven't shown any real momentum. So this is the candle that we can be looking at to take, because you can see the next candle is when we actually got a breakout of this range. So the momentum came in on this candle. So what this allows us to do is reduce our stop loss from 14 pips down to as little as 6 pips. Now, obviously you want to account for a couple pips, but let's just go with this for now. So you can see we tapped in perfectly, but then we continue to the upside. So 6 pips, whereas before we was looking at 14. So our trade would be running highs of 4.5, but as we can refine it down to 6 pips, we've more than doubled our profit to 10.3. And to here, where we was looking at the hourly order block, we had highs of just 3.4%. So you can see the power of this refinement. Now, obviously these are risky entries. If you're just placing entries, without no confirmation once price comes in. Now we will get into how we can wait for more confirmation, but a quick little tip of what we look for is once price taps in on an hourly or a 15-minute order block, into the order block we can drop to a lower time frame like the 5-minute, 1-minute, or even the 30-second time frame, and what we're looking for is essentially price to tap in just like this and then show us the breaker structure. So just like we have here where price is breaking structure, we want to see it on a lower time frame. So just like this, we want to see a nice impulse up, which will look like this. So you can see we broke above structure. So we had this lower low, lower high, a break above. And let's just say that this is a higher time frame, POI, point of interest, or order block. Okay, so we tapped in and then we want to see that lower time frame breaker structure, which will then create an order block on the lower time frame. So this gives us more confirmation, a lot more confirmation, rather than taking these riskier entries, with the one tap and then go. We're waiting for price to show its hand, and once we get this breaker structure, we can then obviously enter. We have a very tight stop loss, and this is how we are able to get involved with like a 1, 2, or 3 pip stop loss, and then obviously have a really good risk to reward on trades. But we will get into this in later videos. But yeah, that's the second example. Let's get into another one. Next example, we have pretty much the same thing, but I want to just drill this concept as much as I can because it's very powerful. So left, we have hourly time frame. We impulsed up, breaking structure. So this is where the move initiated from. So let me just zoom in. So again, we have the last down move here, but we can refine it down to this candle here, just like that, which gives us, let me just delete this off, which gives us a circumference of 15, nearly 16 pips. Okay, so once we pushed off, we can set our entry, and we would have got tagged in on this candle here. Now our stop loss would need to be as high as 15.7 pips. Okay, so you can see we tapped in once, twice, again we pushed off, but then we come back in to push lower before we then pushed off and broke structure. Now 15.7 pips is a very large stop loss size, so let's see how we can refine it down on the 15. So here's the 15. Now this is that move here, just on the 15 time frame. You can see, let's just zoom right in. The last down move is here on this doji, okay? So the momentum came in on the next candles, which also broke above this high. So this is the last down move, okay? So it's likely for price to come back to this area, potentially come lower to here, but you know, it could come to here and then continue. So let's go and see what happens. So here you go. We also built some liquidity from these lows here. Now you can see we did wick in, so this was probably caused by news, but you know, news is just a way for the large institutions to, you know, get in, push price down to mitigate and close out any sell positions they have before stacking orders and then continuing. So if we was to set our entry on the 15-minute order block, we would be looking at our entry there with a stop loss. We have this wick here, but let's just go to the order block. So we're looking at about 5 pips, let's say 5 pips. So you can see we're able to reduce our stop loss size from here, which was 15, to here, which is 5 pips. So 10 pips reduced from our stop loss, which ultimately is going to give us a lot better risk to reward on trades. So you can see the high up here, we're looking at 11%, and here on the hourly time frame, 3%. Now we're on AUD USD looking at a sell example. So we're looking for bearish order block refinement. Now on the hourly time frame here, we did have a very impulsive move down that broke a lot of structure. So we would have an area or an order block up here that we could look at. But as we look at what price done, we pulled back, then we broke structure again, which creates another order block. So it doesn't necessarily mean price needs to come up here because we've broken structure already. So this could be used for a later date. So we broke structure here. So we have the bearish order block, last bullish candle before the down move. Now if we're looking at entering, we would have been tagged in on our limit order here with our stop loss needing to be 12 pips. Okay, so you can see from the high and the low is 12 pips of that order block. Now a good target for us to be looking at is the low, which is here, or just below it. So we're looking at 5% to the low. But if we again look to the right, this is the 15-minute time frame. We can actually, let me just zoom in. Let me zoom in. So this is that same move, but we can refine it down. So if we look at the hourly time frame, we have these wicks. Now when we see wicks at the top like this, it basically means it's an area of interest on a lower time frame. So this is that on the 15 minutes. So we have this move to the downside, which broke structure as well. And we have the last bullish up move before the down move, but we can refine it to this candle because we haven't shown the momentum. So this is our refined order block. So we're now looking at 7 pips as opposed to 12 pips from the hourly order block. Okay, and then you can see what we got was price tapped in, mitigated to the 50% of the order block, and then the momentum came in. Now, as we refine it down, we have 8, nearly 9% to the low, as opposed to 5% here. So we've nearly doubled our return just to the low. Okay, so let's look at the hourly time frame. You can see we got that really nice reaction as we tapped in. 12 pip stop loss here, refined down to 7 pips. And then you can see we then did put in that new low, and we would have hit our target for 5% here, and then 9% here. As you can see, we put in that new low.